What's up everybody? In today's Bitcoin video, we are going to discuss two key levels that you're going to want to watch for, which will give you a really good trade if you just wait for either one of those key levels as a confirmation signal. We're going to get into that later. We're going to discuss the downside target as well as the upside target should any of those key levels get flashed. And if you want my advice and suggestions on mindset that you should take into the next week, then you're going to want to stick around to the end of this video. But otherwise, let's kick off this little Bitcoin update, at least for the next 7 days or so. Now, the first thing you need to understand is that we are in bearish market structure at the moment, where we are getting lower highs and lower lows and constantly breaking market structure to the downside. However, in just about 12 to 16 hours ago, we got the first real break of structure to the upside. Now, do I consider this as a true break of structure? Because it looks really ugly on like the 4-hourly chart. It looks really ugly on every time frame actually. And I would say the answer to that is yes. Now, to get into the first key level that I mentioned in the beginning of this video, the first key level that you're going to want to watch for is 18,600. If this level gets broken, or heck, even if as long as 18,850, if this level gets broken, there is a very, very high possibility that you're going to revisit 17,600. Now, 17,600 is the bottom of the capitulation over there. And the reason I say that is because the markets move, based on liquidity. And I want you to imagine this, right? There is a reason why market structure keeps breaking down. It's because there is a level that they are targeting. Maybe there are a lot of people who have went long either at any of these points and have their liquidations or stop losses set right below 17,600, which means that if the market makers bring the price to that level, well, a lot of people are going to get screwed, royally screwed. You're going to get like $1 billion liquidation essentially. And whenever people get liquidated, the market makers make money. So it is in their best interest to liquidate as many people as possible. And in order to identify those areas where they might look to target, then this is where you sort of look, which is previous swing lows. And this swing low is very significant because it is essentially the low of the capitulation. And is that actually going to be the bottom for Bitcoin in a macro sort of sense? No. But this video is not going to be a macro sort of analysis, but I do just want to give you my reason for why I think that it is not going to be a macro low. And I think that Bitcoin still has room for further downside. Now, in the upcoming week, I'm actually going to release a series of videos discussing a lot of macroeconomic factors, such as what the Fed is doing, really high, high time frame, weekly, monthly. We're going to talk about the Bitcoin halving and all that, all that good stuff. Now, if that sounds like something interesting to you, you're going to want to subscribe to this channel so that you stay up to date on when those videos get posted. It's going to be super, super valuable. Now, back to the reason why I think that is not going to be a macro bottom. Now, I want you to bring your attention to this right here. Now, I want you to take a look at the low of that candle. You can see that the L over there says 17,572. That is the low for this swing low right here. Now, to those of you who can't really see it, this is a swing low, right? The low of this candle is lower than these two candles next to it. Now, the reason why that matters is because during this liquidation event, if you just zoom in to the low of this candle, it was actually at 17,622, which means technically speaking, we have not broken this low yet, which means the market makers might not have gotten the liquidity that they are looking to get yet. And so if we take a look at from this perspective, this can be treated as a double bottom, right? Relatively equal lows. And to any follower that has followed me for any amount of time, just relatively equal lows or highs are prime liquidity, just areas that the market makers really, really like to take out, because whenever retail sees, relatively equal lows or highs, they immediately start thinking, oh, hey, this is strong support. That is strong resistance. And so when the price gets here, I'm not going to expect it to break that level. So what I'm going to do is I'm going to just put a long there, or if I have long at any point in time in these parts, basically, I'm going to set my stop loss right below there. So that is sort of the reason why I think, and I'm very confident that this is not going to be the macro low. But that does not mean that we will not get a relief rally back up to 25K or even 27K, maybe even 28K. I'm going to share like those exact upside targets as well as the reason why I think so later. But for now, you just need to understand that if you do break that low over there, you are easily going to target 17,600 and this level right here at 16,200. So if you get an opportunity to get Bitcoin at, either one of these prices, you're going to want to do so because you can expect some kind of a relief rally upwards. So this is how you make money, right? By waiting for the price to take out key levels before you hop in. That is going to sum it up for the downside targets. Now, going back into the 4-hourly chart, let's talk about the upside targets, because at the moment we have formed a sort of high, and at the moment we are in the process of forming a 4-hourly time frame high low. On the 1-hourly, market structure has already shifted technically, because you've got a high, you've got a high low, and now you want to expect, right, if prices are going to continue to remain bullish, then you're going to expect prices to break 21k, and the first target for Bitcoin to the upside is going to be at 22k. The reason for that is because this is the previous weekly high. Now, the reason why I have these indicators in the first place is because they are incredibly useful. Every one of these key levels, such as the previous weekly high, the previous weekly low, the previous daily low, whatever, these represent key sort of liquidity areas that market makers really love. So you always want to pay attention to these levels, because they represent a sort of area of interest, or like a area of value essentially, where you can get into a trade with relatively low risk and relatively high reward. Now, going back to the 4-hourly chart, that's going to be the first target. Now, as for the entry that you might want to catch in order to take advantage of an up move, is honestly just assuming that this is the market structure shifting. You could just go long here, place your stop loss right underneath this low right here, which we discussed, and put your target at 22,000. So that would look something like this, right? With a 5% stop loss at about 11% gain. Of course, this is absolutely terrible in terms of a risk to reward standpoint. So now the other option would be to go long here with a stop loss at the recent swing low, because assuming that market structure has shifted, then you do not expect this low to get broken. So in this case, this is sort of a trade that I would play around with. Of course, this is a little bit higher risk, because you are not exactly taking this trade from a area value. In fact, the area value in this case will not come until you hit about 19,100, because this right here is a sort of bullish order block. And not only that, but if we narrow it down a little bit more, you can see that I just want you to imagine it this way, right? Before price has came down to these prices, this zone right here, from here to here, there was zero price action, right? And this is what you call a fair value gap. Now, fair value gaps tend to get filled, just like how imbalances in the market tend to get filled. So in this case, if you were looking for a long, I would do so closer to when the fair value gap has filled. So my actual target, like my actual entry, not saying I will take this, and I'm not recommending you guys take this as well, right? This is not financial advice or whatever. Sharing some ideas, so hopefully you can see how I might jump into an entry, right? In this case, this would have a risk to reward of 8.5. This means that for every $100 that you risk, you will have gotten back $850, which is immensely good in a financial standpoint. So this is sort of how I would do it, and hopefully you have learned something from the way I'm looking at these markets. If you have, I want you to comment down in the comment section below. Learn. It would help out the YouTube algorithm a lot, and I would greatly appreciate it, along with a like. Now, that's going to be the first upside target, and now I'm going to get into the second and third upside target, and that's going to be right here at 23,000 as well as 25,000. Now, why do I say so? Well, not only do you have a previous swing high here that has not been touched in a while, but you also have the previous monthly mid-range at 25k. And remember that this analysis is only targeted towards the events of next week. This is not actually like some super macro analysis. I'm just giving you what I think is going to happen in the next week, and 22k is much more of a likely target than 23 or even 25k. If you want to listen to my take on a relief rally sort of zone that I believe Bitcoin will target if we do go into a relief rally, again, subscribe to this channel. I'm going to be showing that next week. Now, to get into the suggestions that I would recommend for you guys heading into the next week, it's very simple, really. Focus on lower time frame trading, because currently macroeconomic factors have not indicated that we are going to go back into a sort of bullish, very bullish trend for Bitcoin. So swing trading, just like how it has been suffering for, bullish, like long swing trading, just like how that has been suffering for the last few months, it is likely going to suffer, continue suffering. I don't expect that to change this week. However, especially when you consider the fact that on next Wednesday, you are going to have an FOMC meeting, which is going to really take down the volatility in every single market, like every single risk on market out there. So when you consider that fact, I don't think next week is going to change a lot for swing trading in terms of the long direction. So most likely you're going to benefit a lot if you just focus on lower time frame trading, intraday, opening the position and closing the position within the same day. And the second piece of advice that I would give to you guys is, even though I have given you guys key levels as well as key areas in order to target, as well as downside and upside targets, my sincere recommendation is for you to set alerts, not limits. Now, why do I say so? Because I expect July to be a pretty volatile week for Bitcoin. Now, we have been seeing a lot of just consolidation over the past 2 weeks or so, and I expect July to be a little bit more volatile than what we are seeing at the moment. In fact, and only recently we are starting to see the Bitcoin volatility index tick up a bit at 5 points. Now, because volatility is going to continue to be high, if you just simply set limits with especially high leverage, you're just going to get stopped out before the price moves in your favor. So set alerts at the key areas that I mentioned and wait for price to come to you instead of you trying to chase price. And talking about the Bitcoin volatility index, if you want to figure out how to use this tool that can time Bitcoin tops and bottoms to a very, very scary degree, I have made a full video on that you're going to want to check out right after this.